This week gave Tesla investors one clear message. Tesla's future is becoming more real, but the risks are also becoming easier to see. The stock moved strongly, FSD expanded internationally, Robotaxi and Cybercab moved closer to real-world execution. Tesla Energy also showed an important signal, but recalls, quality control, and customer communication issues reminded us that execution still matters. So today, let's connect the dots and look at what this week really means for Tesla and long-term TSLA investors. Good morning, everyone. This is Ken. Today is our weekly Tesla recap. This week, the key question is simple. Is Tesla still just promising the future, or is it actually turning that future into a real business? That is the lens I want to use today. First, Tesla stock. Tesla broke through the important $400 level and moved close to $450 before pulling back into the $420 range. Some investors may see this as weakness, but after a strong rally, a pullback is normal. The real question is whether Tesla can turn the old $400 resistance area into new support. If Tesla can hold around the $400 to $407 zone, that would be a constructive sign. So I would not judge the stock only by the pullback. The bigger question is whether the market is starting to value Tesla again as more than just a car company. That brings us to FSD. This week, FSD was one of the biggest stories. In China, FSD supervised appears to be moving forward. That matters because China is extremely competitive. Tesla is fighting against BYD, Xiaomi, XPeng, Huawei-backed players, and many others. If Tesla only competes on price, margins will be pressured. That is why FSD matters. It gives Tesla a software-based advantage that is harder to copy than a price cut. But we need to stay realistic. This is still FSD supervised. The driver must monitor the system. So it is progress, but not full autonomy yet. Europe also gave us an important signal. FSD supervised expanded to Lithuania after the Netherlands. Lithuania itself is not the main point. The point is that FSD is slowly expanding in Europe, one country at a time. Europe has always been difficult because of strict regulations, so even small progress matters. Also, Tesla reportedly shifted FSD in Europe and the UK more towards subscriptions instead of one-time purchases. For investors, this is important. If FSD becomes a monthly subscription, it could become recurring software revenue, but only if users feel it is valuable enough to keep paying for. The software update side was also interesting. FSD version 14.3.3 included improvements like actually smart summon speed, fewer driver monitoring warnings, Grok voice commands, and an intervention counter. The intervention counter is especially important because it helps owners measure FSD progress. Instead of saying FSD feels better, users can see how often they actually had to take over. That matters because trust is built through measurable improvement. FSD does not need to become perfect overnight, but it needs to keep improving in a way users can actually feel. Next, Robotaxi and Cybercab. This week, we saw signs that Tesla is preparing more of the operational side of Robotaxi. That matters because Robotaxi is not just software. It needs charging, maintenance, insurance, regulation, customer support, and public trust. At the same time, there was a reported low-speed collision in Austin. No passengers were reportedly inside, and it appears to have been low speed, but investors should not ignore it. Robotaxi will be judged differently from normal cars. Even small incidents can affect public trust. So my view is simple. Robotaxi is becoming more real, but the real-world challenges are also becoming more real. Cybercab also had an interesting update with the reported 165 watt-hours per mile efficiency figure. That number matters because robotaxi economics depend heavily on operating costs. A private car sits parked most of the day, but a robotaxi should run for many hours, so lower energy use can mean better margins over time. Still, efficiency alone does not guarantee success. Tesla still needs production scale, regulatory approval, reliability, and customer adoption. Now, let's talk about the negative side. Tesla had recall and quality-related headlines around Model Y, including a rear-view camera issue and a certification label issue. Not all recalls are equal. A software-related recall is very different from a major brake, battery, or structural problem. But the label issue does raise questions about quality control. And in Canada, some Model 3 Premium RWD buyers were frustrated by changes in acceleration specifications. This matters because it affects customer trust. Tesla moves fast, and that is a strength. But when changes affect performance, pricing, or purchase decisions, Tesla needs clearer communication. Finally, Tesla Energy. This may be the most underrated story of the week. Reports around Megapack projects, including a major energy project involving Meta and Enbridge, are important because AI is changing electricity demand. AI data centers require huge amounts of stable power. That is where battery storage becomes important. Megapack can help stabilize the grid and support large-scale electricity demand. So Tesla Energy is not just a side business. It may become part of the AI infrastructure story, and long-term investors should not ignore that. So what was the real story of Tesla this week? In my view, this was a realistic week. The stock showed strength, but now needs to prove support. FSD expanded, but it is still supervised. Robotaxi and Cybercab moved closer to reality, but safety and regulation remain key challenges. Recalls and communication issues showed Tesla still has execution risks, and Tesla Energy showed that Tesla may have a bigger role in the AI era than many people realize. For long-term Tesla investors, this is the right way to look at the company, not with blind optimism, not with emotional negativity, but with balance. Tesla is trying to build several difficult businesses at once: EVs, autonomy, robotaxi, energy storage, AI infrastructure. That is why Tesla is exciting, but that is also why execution matters. The next stage for Tesla is not about bigger promises. It is about proving step by step that those promises can become real businesses. If this weekly breakdown helped you, please hit the like button. I cover Tesla, AI, autonomy, energy, and the future of investing every day, so make sure to subscribe. Thank you for watching, and as always, let's keep enjoying life in the future. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.